Hey, welcome back to Financial Intelligence. Today, we have an amazing opportunity for us to talk to a TikTok legend, a star, Anthony Scheirer, the insurance claim guy. Anthony, welcome to the show.
Hey, thanks for having me.
Right on. So, you and I started talking a few weeks ago about what you do and how you do it. I found you on TikTok, and boy, I tell you, it really hit home. What you want to give us a quick introduction of who you are and what you do?
Yeah, I'm licensed as a public insurance adjuster. And what we do is represent homeowners against the insurance company adjuster when they have a home insurance claim. So I like to tell people I'm like a realtor, but for insurance claims. The easiest way to explain it.
Hmm.
Yeah. So I always say that I'm a Sherpa because there's 782 things that you do when you buy or sell a house, right? And you might not use every one of them, but I'm always there to be there and pick up the slack and help keep us going north to the final destination. But you do something a little bit different, right? You're independent, you're third party.
Well, so now, an independent adjuster is also an adjuster that works for the insurance company. They just can work for any insurance company.
Okay.
I'm a public insurance adjuster, and I work for a firm. So I'm regional vice president for a firm called Metro Public Adjustment. We've been around for about 30 years now. So we represent homeowners directly. Right? We're not a third party. We are essentially the homeowner.
You work on, so you're a fiduciary.
We are fiduciary. Yes, sir.
Just like when you hire a real estate agent, they're a fiduciary. When you hire Patrick, he's supposed to be a fiduciary.
Supposed to be.
Yeah.
And just and just so I'm clear, so homeowner has a situation in their house, file a claim. They're using they got so there's a couple people involved now. There's the homeowner, there's the home insurer, maybe an agent that sold them the policy, right? Is involved as a the life the home insurance carrier will have some kind of adjuster, and then you're the adjuster coming in that be hired by the homeowner.
Yeah, in a perfect world, the homeowner wouldn't file a claim without letting me file it for them.
Oh, I see.
So, right. So but nobody knows I even exist for the most part. The insurance company does a good job keeping public insurance adjuster quiet, and there's not a lot of us in the nation, believe it or not. So it's contractors like to think that they do what we do, but don't charge a fee. So when it comes down to an insurance claim, it's that homeowner and then the insurance company adjuster. Uh, the homeowners by themselves. They don't have representation. Their agent, as you mentioned, isn't. Most of them aren't allowed to talk about claims at all because there might be some liability if that agent says something, especially if they say it in writing, to give that homeowner hope that they have coverage or tell them they have coverage when they really don't. So they want to leave that up to the company adjuster to come out to determine to give their opinion of what that homeowner's owed.
For example, and Anthony, you can jump in anytime you want because I'm sure I did the wrong thing. I I did my kitchen when we first moved into this house about 20 years ago. Um, we had maple, blah blah blah, and then we had our floors redone. And the guys that replaced the floors pulled out the dishwasher, and when they put it back in after putting the new floor back in, down below, they put a little tiny micro hole in the drain of the dishwasher. And through years, it would just fizzle, little mist every time the water would push out. And over time, it just turned into this black gunk of nastiness, and it was gross, and it destroyed three of the boxes on the next to my dishwasher. So, after years that happening, the dishwasher got old. So it was Labor Day weekend. I pulled out an old one, the old dishwasher, put in the new one, and there was just a bunch of black nastiness all there. So I start digging and digging and digging, and I'm like, this has to be an insurance claim. This has to be an insurance claim. Well, 3 weeks later, the insurance adjuster calls and comes over to my house and says, "No, this isn't a catastrophic event. We're not going to cover it."
Yeah, I hear that all the time. I thought you were gonna get denied for another reason, but All right, they went to, it was not big enough, right?
Oh,
The word catastrophic doesn't appear in your home insurance policy. Let's start there, right? You're owed money that's over your deductible. So whatever your deductible is, the $1 over that amount is catastrophic, because that's why you have your deductible. What can you afford? Anything over that, it's catastrophic for
yep.
a lot of homeowners. And we need to talk about deductibles because they're getting crazy, but we'll get there. So what? Yeah. So if this ever happens to anybody, our firm really, we specialize in what we call a settlement double check or denial double check. And what's cool is it doesn't cost the homeowner anything to have us come out and look and assess and even go through all the motions, create a valuation, call the insurance company, present the loss, do all kinds of work. And if at the end of the day that claim is still denied, there's no fee for what we do. And if they already got some money and we get them some more, we take a fee on the extra. And I don't know many firms that do that, but the way ours is set up, we can handle these smaller claims or even risking not getting anything. What we're learning is that we're getting so much more money when it comes to these reopens that it's almost all we do anymore. It's just they're so underpaid, wrongfully denied almost every single time. So I thought you were going with they're going to tell you, well, we don't owe for leaks over time. That's the other denial they usually use with plumbing losses. It's data discovery is often the data loss, but you can look in there and the insurance company looks in there and says, wow, that's been leaking over time. It's been leaking probably way more than 2 weeks. And you're going to go, oh yeah, it looks that way. Well, you just ran yourself right into an exclusion in your policy saying, we don't owe you for a long-term leak, typically 2 weeks or more.
Right.
Now, the secret is they still owe for the first 13 days. So they owe for the damage anyway because there's no way to separate the damage difference.
Is that part of the insurance law? Is that some sort of, I don't know, is it like a regulation or a law stating that all insurance companies have to cover you for the first 13 days?
Well, so case law. There's
Case law.
been plenty of court cases that have revolved around that because the insurance companies love to say, well, it's been leaking over time. And then when they say the roof leak is over time, we're not covering that. That over time phrase isn't even it's only in the plumbing section. So it has nothing to do with the roof leak. But people get denied all the time.
Wow. Man, that's huge. I think just going back to your point about what you said, most people don't even know you exist. I'd say that's absolutely true. I'm thinking there's probably a ton of people out there who have gone through a situation where they either got denied or shortchanged, and they feel like they have no other recourse, right? There's no other, okay, this is what the verdict is. What do I do from here? I guess I'm on my own. And yeah, I'm curious, what's the statute of limitations, if you will? Like how far back can somebody come to you to take a look?
We like to stay within a year of the date of loss.
Oh, bummer.
Some states have longer statute of limitations, but after a year, a lot of evidence gets destroyed.
Right.
A lot of things happen. So the sooner the better. But we tend to stay a year or under, unless it's some extraordinary circumstance.
Yeah, no, that makes sense.
I don't know if you saw this big old jug right here. This is a stack full of receipts that I still have to scan in one day from my non-catastrophic event that cost me upwards of $70,000.
Wow.
Yeah, next time that happens, Vito, I know a guy.
Yeah.
Wow. So
and it's amazing that people don't know the service actually exists, and it's just because nobody really does it. Like there's so few of us that actually, like most public adjusters only do catastrophic losses. So we're being a corporation like we are. Like I said, we can offset the smaller paydays, and we find so many huge wins. Like we turn $25,000 claims into $100,000 plus, more than you would ever imagine. Crazy.
And the key there is don't call your insurance company first, call you, right? Because you have nothing to lose, right?
No, well, so everybody's always worried about our fee. And the big problem in the insurance industry is that everybody thinks that the contractor gets to take all the money plus deductible. And if the homeowner has to pay my fee, well, where's that money going to come from? And so it's a little disingenuous for a contractor to say, well, we just get all the money. Well, how much do you need? Like bid on the work. You just don't get what's in the bank. And so they have, you see a lot of like storm chasers, a lot of people going door to door talking to homeowners and give the free roof inspection. And of course they always find damage and call your insurance company. We'll deal with them. Well, they're not even licensed to deal with them. And they're in the hopes of getting a payday. And what happens is the homeowner a lot of times won't get, oh, there's no damage here. It's not enough for a claim, whatever. Now that homeowner might have lost a claims-free discount in their policy, causing the rates to go up without even having a claim paid. So there's inherent danger in there for that homeowner. And then the contractor, they're doing it to potentially get a payday. And it's an easy sale if the insurance company's paying. And a lot of times these contractors are good at getting the insurance company to pay significantly more than they need. But they take it plus deductible. If you would see, you'd be so frustrated. So I akin it to wholesalers in the real estate industry, right? The homeowners are happy, a new roof for deductible, but the other person made a lot more money than the percentage you would have made, or that homeowner would have got at the end of the day. Make sense?
Oh yeah. I liken what you're describing, and you could tell me if I'm wrong. I liken it to a travel agent. Now, for the last 20, 30 years since the onset of the internet, travel agencies have kind of gone by the wayside because you can get a ticket or whatever, do your own booking online, right? But I found that I call up my travel agent every time I went to Knoxville a couple of weeks ago. I called him up and I said, myself and my 3 kids are going to Knoxville. He took care of everything, and it cost me some more money, and I don't care because I didn't have to deal with going online, checking what the best flights are, blah, blah, blah. He knew what my plans were. He had it all booked out, and I gave him my credit card and was done. And the best part was coming back 3 hours before I was supposed to go to the airport. I got a message from the app saying that the flight was canceled from Knoxville to DFW. And it so happened that airline canceled 193 flights that day. So imagine going online or on the phone, waiting 3 hours to talk to whatever airlines. I don't want to besmirch them because, they're all the same these days. I called up my guy and said, my flight's canceled. Can you make the arrangement? Instead of going out of Knoxville, I had to get up early. It was an inconvenience. And I had to pay a little bit more, and that was an inconvenience to fly out of Nashville at 5 o'clock in the morning. But I got home. I got my kids home. I didn't have to worry about that stress.
Yeah. So not only do we handle the claim for that homeowner in the process, and homeowners, if you read a home insurance policy, which I'm sure nobody has ever done, but there are, I do for fun. So,
and that's the kind of guy you want on your team.
I could probably read every word of Farmer, State Farm, and Allstate's policy, and then the ISO form, word for word, every paragraph, everything, just because I'm amazed by it. And when you analyze the words in it, they can be interpreted different ways, and just like a lawyer, we use that to the homeowner's advantage because the policy is very, very ambiguous, and you would think it's really specific, but the word reasonable appears in that policy dozens of times. So the first thing, you have duties after loss, and you have to report the claim within a reasonable amount of time. Who determines that, right? The insurance company asks them, it's got to be that day or that hour, but statute of limitations is what rules that. It could be years.
Right.
It makes it harder, but then you have the you have a proof of loss document that if you have State Farm, their policy says you have 60 days to produce this document or we're going to deny your claim. Every other policy says you have 60 days after we request it. So like the duties after loss are crazy. How much cleaning up do you have to do? Like when you have a water loss like yours, do you call in mitigation? Those people make you sign an agreement, even if the insurance company sends them in, says they're going to do what they want. If the insurance doesn't pay, you still owe. If you don't pay, you can put a lien on your house.
Right.
And we see time and again where they do too much work where there's no evidence. The homeowner doesn't get paid. It's crazy, insane. And then the homeowner still owes. It's insane.
What a racket. I mean, it's even better than what you described in your situation, Vito, because it's like you can call the claim adjuster here, not pay anything to them. They'll take a look and see if they can help the situation, and they can't get you that flight faster or sooner or better to where you got to go. No harm, no foul. But if they can, they'll get you home right? Faster, sooner, or better, whenever you need to, and get you some money back on it, and take their share. So I mean, it's just, I mean, it seems like a win-win for the consumer all the way around.
And even better, since we're experts on the policy and valuing a loss, like you're not just going home in a 747, you're going home in the Concorde, right? So there's value to what we bring to the table. You're going to end up with a better settlement. It's like if you use a realtor compared to a wholesaler, you're going to have a better settlement at the end of the day, or clicking buttons and buying shares online compared to letting your money guy do it.
Yeah. Which, clicking buttons and doing things online yourself, it works great if you're that person who loves it, knows it, and has the experience. You could have a fantastic experience. But that's not most people, especially when it comes to dealing with their homeowners insurance, right? So great example.
The big problem, the big risk in home insurance is that you're never dealing with apples to apples. The State Farm policy is different than the Farmer's policy, is different than the Allstate policy, is different than the Erie policy, is different than keep going. So unless that policy is written on the ISO form, so the ISO is the Insurance Services Office, they made these forms which home insurance is written on. If you buy a policy from a brokerage, you're going to probably get an ISO form policy. You know what's in there. I know what's in there. It's very standardized. But you buy a State Farm, it is different. There's so much in there. There are more exclusions of coverage, more conditions. Sure, maybe you save an extra buck or two, but at the end of the day, you're going to you have less in the policy.
Right.
And it's a huge risk, and people don't understand it. The agents don't know what they're selling. They have no idea.
Anthony, you mentioned, I think you already said it before, just so I'm clear, though, you guys are available in all 50 states, right? So no matter where the consumer, where that homeowner is at, they can reach out and get some support on this.
Well, yes and no. So there are some states out there called fee cap states where we can only, so like Texas, Florida, Michigan, New York, Delaware, all these are fee cap states where we can only charge a certain percentage. So we can only help with catastrophic losses, and we can't help with the double check because there's too much risk there of not getting paid or too much risk of getting paid a little bit. But there's 35 states or so that there is no fee cap, and we can handle any size claim and help anybody. But there's states of Alabama doesn't really allow public adjusters. Arkansas is the same way. And then Alaska, there's no license available. So we can work in there, but it's like the Wild West. So,
most folks, Wild West of Alaska. Yeah. Most folks we deal with are here in California and that we serve.
Yeah, our team has grown huge in California of recent.
We had somebody on not too long ago talking about the state of insurance in California, especially to do with homeowners. And so it's a pretty interesting state as far as coverage goes. Does that affect what you guys do at all?
Oh, so here's the good news. Homeowners in California can't buy State Farm. Like I don't see the downside to these because the insurance companies that are pulling out are the ones you don't want to be with.
Huh.
So they're just hedging their bets. They'll pull out for a couple of years. They'll be back. But they're just it's like gambling on roulette, and they put all their money on the roulette and no storms hit, and they're like, you know what? I'm going to cash out for a little while, and then they'll go back later. So it's not really, premiums are increasing, and we can talk about why that is, but these companies leaving it's not because of a bad claims climate. There was a report in the Insurance Journal that originally, actually a year and a half ago, there was a report in the Insurance Journal saying that claims and lawsuits around claims are why these companies are leaving Florida and California, and they're going insolvent. And then they did a report. The Florida Department of Financial Services, I guess, did their own report, and not even in the top 10. So a new Insurance Journal report came out, and not even the claims weren't even in the top 10 as why they're going insolvent. They found that they're going insolvent because they're literally wasting money. They're mismanaging it.
They're paying their CEO too much.
They're paying the CEO too much. They're paying for these stadiums and advertising and trying to get more and more premium in, and they blame it on claims. They make everybody scared. Oh, you have a claim, we're going to drop you. Or, oh, too many claims, this insurance company's leaving.
Wow.
Yeah. Right, that's a little different perspective, huh?
Yeah, it's a very different perspective, I'd say, than the narrative that's out there for sure. Yeah.
We definitely lost we lost State Farm, Allstate, Geico just pulled out, and then another couple of them. But at the end of the day, you
That's
know,
like you have no idea how good news that is for homeowners that they
Really?
don't even have the option to buy those policies. Like, so Allstate does what's called an a la carte policy. And if you look at a declarations page, most homeowners, there's a whole bunch of lines that say not purchased, not purchased, not purchased. Because the agent asks you, do you want this? And the homeowner's like, is it going to cost money? They're like, yeah. And like, no, I don't want it. But that's included in everybody else's premium. And so people are saving money, but they're getting much less. And then Allstate as a company and the practices, is another thing. But Farmers doesn't cover a roof leak. Like, you need a hole in your roof. It's called a wind created opening. It said we will not pay for any interior damage caused by rain or hail or whatnot unless there's an opening.
a gaping
prior.
hole.
Yeah.
Wow.
So every other policy would cover it. It's just they're just not well written policies, and nobody knows.
I don't think I've taken that. I've thought about that perspective. I was thinking that the loss of carriers in a state gives the consumer less choice and makes it more challenging to find coverage, right? And so like it may put them in a situation where they're disadvantaged. However, I think another aspect that you're kind of bringing to light here is that may be true. However, the coverages that they're losing are coverage they're probably not going to want anyways because they're a poor value.
Well, it's not about them wanting it or not wanting it. The policies they're sold as comparable, so nobody ever knows. And the agents will swear to me that State Farm is an HO5 policy. I'm like, you can't say that because that means something. That is a specific form that means something specific. And now you're saying that this is that. It's kind of like it, but it's not. So I look at it as the bad choices are off the table. So you gave your kid here's some vegetables and then the candy, we're gonna get rid of that. So now they still have. You don't ever want to shop home insurance with a captive agent because all they know is State Farm, all they know is Farmers,
Right.
all they know is Allstate, and you're unique. And you might have things that you need a broker's agent in any case. And there's 100 more insurance companies in your state. Just because they're not a big famous one doesn't mean they're not a good company. And the other thing a lot of people say about going with a big company is because, well, they're not going to go insolvent because of this big company. Well, that's not a reason to buy bad insurance. And your insurance is still covered by FDIC if that company goes out of business. So you still have $250,000 in coverage if you're in the middle of a claim and they go out.
Yeah, that's a great point too. I don't think a lot of people realize the FDIC part applies in this situation as well. Yeah, good point.
I had no idea that was even a thing.
Yeah.
I just thought it was for bank accounts. That's pretty amazing. So last time we had Tyler on. He's an insurance broker in California.
Yeah.
Taylor, and that I have a great relationship with my insurance agent. So it's one of the top 3 that are pulling out. Right. So the big fear is like, can an insurance company cancel your claim if they're moving out of that state? Now,
Your coverage.
Your coverage. So I'm telling people, no, they can't unless you do something like not make the payment or piss them off for some reason. They can cancel you, but for the most part, they can't cancel you. But for new people, like I'm selling homes here, and people are having to struggle, and some of the places that no insurance companies touching them, like up in the hill.
Well, no, I think, but just to be clear, and man, I think you probably correct us both here. I think a carrier can cancel you. They can just not renew you, right? They can't cancel you in the middle of your policy, but they can non-renew your coverage.
Well, generally they will. If you read your policy, it says we will non-renew you for these reasons, and non-payment premium is one. Increase in hazard. So the insurance company comes out, does an inspection, and you have a trampoline. They'll send you a letter saying you have 30 days to either get more insurance or get rid of the trampoline, or you have a dog, right? So there's an increase in risk. And what most people do is they don't read the letter. They read we're going to cancel you, and they don't do anything. Like, did you read this? You had 30 days to put up a railing. That's all you had to do. But so we don't see that. On our end, we handle thousands of claims, and we don't see people getting dropped for claims. Right?
They can't cancel you because you pull off a claim too, right? I mean, let's say that I did call you, and then I got the money back for my kitchen. They can't cancel me for that either because I'm still making payments. I'm not being egregious.
Yeah, they they're a big company and they can do whatever they want actually at the end of the day. But they're not doing these things. They want their premium. They want that money back. And if you're a good, well-paying customer, there's no reason for them to drop you. You're already prepaying for the risk. So just because you had something happen, there's no reason for them to increase your rates. That house is no more risk today than it was 5 years ago, than it will be 5 years from now. It didn't up and move into Tornado Alley. So the home is still the same risk. So and you're prepaying for it.
Yep. I also, years ago, we bought a bunch of duplexes out in Arkansas. And 3 months to the day that we closed on these duplexes, one of them burned down. Same company. And they sent me a check. I want to say it was like $80,000. And when we went around trying to find out how much it was going to cost to rebuild this duplex, nobody got hurt. Dog got kind of smoke inhalation, whatever. Complete loss, right? The entire thing had to be rolled to the ground. It was going to cost about $140,000, $160,000, almost twice as much to rebuild it than what they gave me. So we let the land go fallow, and I lost income because of that.
Well, I'm always curious as to, especially with the dwelling units, that what type of policy did you have? Did you have an actual cash value policy on that, or was it replacement? Generally, there's a reason why. Well, not always, but generally, it's usually a policy reason why things are so significantly underpaid in most cases.
Right. I mean, that's the questions, right? So what question? Like, I'm ignorant to this, and that's the whole reason why we started this channel. I am ignorant to 90% of the financial things. That's why we have Patrick on. That's why we have you on. What kind of questions should we be asking our insurance agent or broker to make sure that we're covered for something that's a loss that we're paying for?
And not only that, I'm glad you mentioned this, Vito. Like, the other reason why we're doing this is so that we can get a team of experts, right? Because I think it sounds to me, and what do you think? I don't know what you think, Anthony. Here, the agent who got you the coverage for your rentals may have failed you somehow by not getting you the best coverage. I don't know. Wasn't part of the conversation, but that could have been part of the challenge too.
Well, so believe it or not, we've learned that agents are no longer really considered a fiduciary. They're no more than order takers. And what we hear all the time is that's the policy your client bought. So the agent is supposed to be that fiduciary. That's why you want to use a broker's agent, because they're more inclined to be a fiduciary and tell you what you need, because you don't know as a homeowner. So the agent needs to interview you pretty thoroughly, ask you a billion questions about what you have. I mean, they used to come to the homes. I have a survey that I always send to homeowners. I said, if you want to find out if you're at risk of having coverage gaps in your policy, answer these couple questions. One of them is, when you bought your policy, did your agent visit your home? Because if they didn't, you might have things in there like Oriental rugs and Ming vases and artwork and collections, and you might have things that your policy limits on coverage. Jewelry, watches, furs, things like that, business equipment. All these things are very limited in a home insurance policy, and you have to get additional insurance to cover these things properly. Mm-hmm. So what's happening is nobody's getting the treatment they used to get years ago. The agent would come, sit down, have dinner, coffee, cupcakes, and talk to you and see what's going on. That doesn't happen anymore. Everybody's wireless.
Right.
Pay for that convenience, just like traveling, right?
Yeah.
So what do you do as a homeowner? Like, how do you sleep at night if you don't know what you don't know? And my advice to homeowners is, number one, always use a broker. Stay away from these captive agents. Definitely do not go on the internet and click buttons. Stay away from the lemonades. Because you don't, like, every time I see these policies, they always have. So there are things, even on the HO3 policies, what I tell every homeowner, make sure you have at least the ISO HO3 special form. The only one better is the ISO HO5, and then you have high value policies from like Chubb and other companies. But for most of us, we want the HO3 or HO5 special form policy. And if we start there, then on these policies, homeowners, in an effort to save money on premium, can add endorsements that take away coverage. So we see this a lot where the homeowner or the agent says, hey, how about your home's a little older, so instead of replacing with what you have, we're going to replace it with common materials. We're going to give you this endorsement for functional replacement cost. And that might be fine for your walls and stuff, but when you start talking about hardwood floors and custom cabinets, you're getting Home Depot minimum. You're getting the was wood. That's what they owe you, according, because you bought this functional replace. They owe you something functional, not what you had. Now, like State Farm's policy and Farmers policy, that's written into the policy. They do not owe you for any custom construction.
Wow.
Yeah, wow, right? When any other policy affords you same, like, kind, and quality. So homeowners don't know what they're even getting or what to ask for, and when they do get the right thing, even that can have coverage gaps in it. I mentioned earlier about the percentage deductibles that are popping up. This is a new type of deductible. It goes up every year.
It's percentage deductible.
Yeah, so it's usually found as like 1%, 2%. Sometimes I see a 0.5%. And you're like, well, 0.5% of what? 1% of what? Or your overall coverage amount, your coverage A. So if your home's covered for $1 million and you have a 1% deductible, you have a $10,000 deductible. But that's not the bad part. Next year, it's going to cost more to rebuild your home every year. So your coverage A amount isn't the value of your home. It's the rebuild cost of your home. That's going to go up every year because of inflation. Well, because your deductible is attached to that number, your deductible jumps every year, after year, after year, after year. And now we're finding homeowners with these $8,000, $9,000, $10,000 deductibles where they're like, I had a $1,000 deductible.
Yeah, it's like an adjustable rate mortgage, but never adjusts the way you want it to go.
Never adjust down. And homeowners have no idea. It's just, saving them on premium. But now, I'm not a fan of large deductibles because you end up paying out for every little thing. Well, that's not more than your deductible. So it's let's say you have a $5,000 deductible. The average claim is about $10,000. So you're giving up like a quarter of potential claims you're not going to get paid for because you have this large deductible. So you're paying out of pocket all these times your roof has a leak or a shingle's missing. Yeah. And then now you finally have a claim and now you have this large deductible. So you're double, triple, quadruple paying and thinking you're saving premium. But at the end of the day, the insurance company's making out like a bandit because they're not paying your claims.
Yeah. Right. Makes sense. Man. I bet we can go on and on here.
Yeah, it's such a crazy.
I teach all the new adjusters. I talk about like theory for hours.
Yeah, it's so scary too. It's so frustrating because I know it's like I've done a lot of upgrades in my house. And I call my insurance agent. She's like, "Well, take pictures of everything, and then make sure you do this and make sure you do this." I'm like, "What? Okay, I'll get around to it."
Yeah, if you read your policy, when you do any kind of addition to your home or alteration, 60 days before you do the renovation, you're supposed to tell your insurance company that you did these renovations or you're going to do these renovations. So that, because if you have a claim and you say, oh, and we just did this, right? We get a lot of homeowners that say that. Well, because you didn't tell them 60 days before you made the renovation, well, you weren't covered properly. So now you don't get your guaranteed replacement costs or your extended replacement cost benefits. So in your home insurance policy, your coverage A, your replacement cost is, let's say, $500,000 or $1 million. A lot of policies have extended replacement costs, which means there's 25 or 50% more money just in case inflation, just in case you need it. But if you did a renovation and you didn't tell them about it, kiss that money goodbye. You won't have the opportunity to get it, even though you're paying premium on it all those years because you didn't tell them you made a renovation.
And this could happen like 3, 4, 5, 10 years down the road, right? I'm like, oh, well, you never told us about this. So. Yep.
It's brutal. Like if they want to be brutal, it's brutal.
And the big three are brutal.
Even if a homeowner moves out for some kind of extended stay somewhere, like they have to go to rehab or a divorce or separation, if that named insured is not living at that house, they cannot pay a claim at all because the way the policy is written, they're covering the named insured at the place where they reside. And that residence, if they're getting mail delivered somewhere else for whatever reason, they don't reside at that home anymore. Now their policy is no good.
That is crap.
It's crazy. It's insanity.
Freaking hate insurance. I'm all getting angst. I got to go for a rest.
When you have a claim and the insurance company starts asking you questions, it's an interrogation. They're trying to find out, like, how can we get out of paying this stuff? Like,
Right.
almost more often than not.
That's why
Anthony,
you're
let me
here.
ask you. So, I'm wondering, what's the best way to get more information on how somebody would work with you? So, say I buy a home, or I just got coverage and I don't have a claim yet, but is there a way to like get you involved? So, like, how do they either sign up or get on
Yeah.
your radar so that as soon as a claim does come up, they know to check off with you to get you involved first.
Well,
Does that make sense?
we offer a free service for a homeowner. It's a policy coverage gap review. And the homeowner just has to email me their declarations page, and I look at it. I look for the red flags, and I send them, hey, call your agent, ask them this, call your agent, change that, get rid of this company altogether. Like, so I don't sell insurance, but I can give that advice to homeowners.
Hmm.
And we, as a company, that's actually our marketing tactic, to go visit every single homeowner we can find and give them this information, very personalized. Go back to your agent and fix this. That's why I like hiring realtors, because realtors, it gets them to be able to talk to more homeowners because they have an excuse to talk to them, because I can train you how to identify this stuff, and you can talk to the homeowner, and now you got more people in your book of business, right? Same thing.
Got it. So you guys do not, and just so we're clear, there's no conflict of interest, I guess. I guess is what we'll call it. You guys do not offer, property and casualty coverage. You're not
Yeah.
selling
I do
homeowners
not sell
insurance,
insurance. Absolutely
but you
not.
will do review the coverage to say, hey, here's the places we think that you could improve or change or get rid of in your
Yep.
coverage.
Go back to your agent and fix it. Yep.
Got it. And then that way, I guess they become part of your they're in your CRM, if you will, and now they can reach out to you and you stay in touch with them for when those claims come up.
Well, I'm terrible at the staying in touch. So if they were, but they have my number. They can reach
Got
out
it.
to me.
Got it. Okay. All right.
Yeah,
Fair enough.
I'm for as good as I am terrible at doing the constant,
Well,
constant.
let's put a little bit of pressure on the homeowner, right? If they want to make that money back on that claim, I guess they'll remember.
Yeah, I'm here to help them. I tell homeowners, listen, I'm literally here to give you money. So it's
You,
Right.
you touched on it briefly, and just before I want to make sure we hit it before we wrap up. Or I don't want to forget to. You talked about an opportunity where people can come on board with you and either as an independent contractor of some sort and make some
yeah,
income. Can you talk about that a little for a second?
yeah. So we're looking for independent contractors to essentially, you can either go look for people with home insurance claims. You can partner with like a roofer or something like that and go back to all their old clients and double check all those claims. But our claims rep position is literally just signing up that homeowner, collecting the pictures. It can be totally virtual, and we get paid about $1,000 every time we get a homeowner paid. So for the half hour worth of work, it's very lucrative. Most states you need to get your public adjuster's license, but we help you do that. We have free classes, free onboarding. Like, there's no fees for anything except for your state license and errors, emissions, and bond. But we also have group rates on that kind of stuff. Yeah,
Nice.
it's great. I love it. I think everybody, just because everybody doesn't have, like, you don't have to go on roofs, you don't have to go under homes, you don't have to do the measurements, you don't have to argue with the insurance company. We have other people to handle that aspect of it. So it's just a great certification to have, and you're going to trip over people, especially if you're in the industry, especially like financial services as well. A lot of people want to borrow from their 401k to pay for the renovation because the insurance company didn't pay the claim.
Mhm.
They'd be like, well, wait a minute, let's double check this. I'll send you the DocuSign, and that's it.
Nice. That sounds like a great little side hustle for somebody who's out there trying
It's
to,
it's
make
the
make
best
that.
side hustle. Let me tell
Yeah.
you, like, I do 20 to 40 of these every month, and it is the best side hustle in the world. Let me tell you,
Nice.
because it doesn't cost anybody. Like, I don't have to collect a check. I like it. Almost all I do is settlement double check. So it's more money or it's free. Sign here.
Yeah, that's great.
It's a no-brainer, right? And I mean, I know you don't follow up, which a lot of people don't follow up, but I think what you're doing on TikTok is amazing, because I see you all the time, and once I get down that rabbit hole, I'm just like, I get so pissed off at insurance companies, and it's a necessary evil. And it's great that you're around. Up until TikTok, which is a couple of years ago, I didn't even know you existed.
Yeah, I can say I've never heard of this role. Frankly, I've never heard of this resource. So it's pretty awesome.
Yeah, it's state licensed fiduciary position. It's just mind blowing that nobody knows about it, and it's a nice niche, to be able to, like, I tell everybody I get to put on my hero's cape, and come in and say, like, the stories I hear 2, 3, 4 times a day. It just, it's the last girl I talked to, I said, it's amazing I'm not more depressed than I. Yeah, I'm really, because this is all I hear is just this tragedy, and people are crying a lot of times, and it's like, all right, well, take a deep breath and let's see what we can do. But it's great making that phone call saying, I got good news and bad news, and they're like, well, what's the bad news, or what's the good news? I say, well, because I always say, if I can get you $1,000 or so more, would that help you out? And they're like, yeah. Well, I got that $1,000. And they're like, well, what's the bad news? I don't know what to do with the other 6. And it's I tell you, it's so rewarding, and they're so thankful, and
I bet.
Yeah, but then you get the homeowners that aren't so thankful. They're like, you get them more money, or you get them overturned from a denial to some money, and they're like, well, but it's not enough. I'm like, you had 0. Now you have money. So
it's a gift horse in the mouth, right?
Sure.
Yeah.
So
people are people.
2 things, because we're running out of time now. One is, what is your favorite story of saving people? And then 2, we're going to segue into the next topic, which is your side hustle. And we'll probably have to do that in another time.
Yeah, that's fine. My favorite story, I tell it all the time. I was training this girl named Doreen, and we were doing policy reviews, and we did a policy review for her optometrist, and optometrist said, hey, go visit my family. And so we're in this neighborhood, and we drive there, and we meet there. We drive in separate cars, and we go to this house. But on the way, we saw this house with a big blue tarp on it. And I said, well, we're going to ask this homeowner if they know that homeowner, because it'd be great to get referred into there. And we asked the homeowner, and they said, no, we don't know them. And we asked how long that tarp's been on the roof, and they're like, it's been like 5 months. So Doreen and I go, and we knock on the door, and we don't teach door knocking. I said, but this lady obviously is struggling. So we go and knock on the door. I'm like, hi, I'm Anthony. This is Doreen. We're public insurance adjusters. We see you have a tarp on the roof. Looks like you could use some help. And she slammed the door on our face. So I told Doreen, I'm like, well, that's why we don't teach door knocking, because it's going to be brutal. And Doreen calls me 2 days later. She goes, you're not going to believe this. I said, what? She goes, that house that they slammed the door in our face? I said, yeah. She goes, we're going there tomorrow. I said, how are we going there tomorrow? Remember my optometrist? Apparently the husband of the lady that slammed the door in our face goes to that same optometrist, was complaining about the tarp on the roof. The optometrist referred us in. He goes, oh, you have to meet Doreen and Anthony. So 2 days later, knock on her door. Hi, I'm Anthony. This is Doreen, right? And she's all embarrassed, and she lets us in. And it took her an hour to tell us a story about the tree that fell through her home. And the insurance company sent out the restoration company, and they tarped the roof. And the insurance company offered $25,000, and nobody would touch it. Now, they slammed the door in our face because every roofer in the world saw that blue tarp and like, hey, we can help you. Insurance claim, right? They think they can do that. And they can't. They're not licensed to do that. And this poor lady was frustrated with that process. So the insurance company gave her $25,000. Now, while I'm in her house, there is a blue tarp and yellow walls. And it was green in that house because she had a tarp and no roof. There were tree branches. This is like an 80-year-old woman. Tree branches still in her living room. So we get her all signed up. We get people out there, get everything cleaned up, and go down this path. And we got her an additional $114,000.
Wow!
Holy moly!
Yep. So the next time you slam your door in somebody's face, remember it might be $100,000 check.
Only open my door to you, Anthony.
Yeah, and
wow.
Wow. And what I attribute to that, though, is because we do the marketing we do with the policy reviews, and that's so effective. And when when people need you, people are going to refer. Like if you guys run into somebody struggling with a home insurance claim, almost guarantee you're going to refer me. And when I educate people and do my videos, my TikToks, this is what happens, and it's awesome to be able to affect people's lives like this.
Wow.
Yeah, that's an awesome story.
But that's not an outlier. I have multiple claims where the insurance company gave $5, $10 grand, $20 grand, and it's 6 figures plus.
Yeah, I bet. I mean, it's probably
almost
enormous people out there.
When a homeowner already got paid, we do a double check. We almost always get them double or more what they originally got paid.
Wow. I mean, so I think the bottom line in here is there's nothing to lose for the homeowner here, outside of what you could possibly still get them, right? So this is just a win-win. You go into a claim process, get somebody like yourself on your side to take a look and see what else can be done to get more and get the most out of your claim. And if they can't, there's nothing come out of the pocket for the homeowner to just to make sure that there's nothing else that they can be done, right? So I mean, this is just a win-win all the way around.
Yeah, absolutely, 100% free if we can't get them paid.
Yeah,
we don't take a pay on anything we get them. Yeah, it's a win-win. I love it.
Do you ever talk to insurance brokers and say this is something you might want to offer your clients?
Oh yeah, so I do a lot of teaching of brokerages. I have classes, so I will teach agents of brokerage how to sell against these popular companies you see on TV, because they have trouble. They don't know these other policies, and I know them word for word. I have screenshots like, can you send that to us, right? Because they want to show the potential client like, you don't want that because look, they don't owe you for same like kind of quality. Why would you buy that?
Right.
Why wouldn't why wouldn't a broker, I guess, automatically use you guys? Or is that, I'm trying to think, what am I missing here?
Yeah, you're missing the payday. That there's a thing called loss ratio, and typically the bonus structure is based upon premiums that a brokerage brings in compared to claims get paid out.
I see.
So I will ruin that in a heartbeat for them.
Got it.
For the broker.
For the broker, and
Right.
so now that's that's your insurance agent in their office, and like why would you call them for a claim? They have that relationship, and they have nobody says it, but that's what's going on there.
I see. Got it. Man.
Wow. Well, I got to have you back on this. I know you're busy, and
anytime,
Anthony, dude, I really appreciate this. Really quickly, as a segue, as a teaser, I want to get you on next week or two about your side hustle. Tell me about it.
Yeah, so we create businesses and venture and private equity funds for professional athletes, and most of them are real estate based. They're not REITs; they're 100% equity. We create the business for the athletes, and then we do all the SEC paperwork and start with a Reg D, where we offer shares of the company or the fund at $4 a share. Then we plan on taking it public through what's called a Reg A IPO. So through the Jobs Act in 2016, there's this Regulation A where non-accredited investors can invest, and athletes have a lot of fans. So those fans are most likely going to take part of that IPO, giving the Reg D investors an early exit with, because we can set the price of that IPO. So they're going to be set at $5 a share, and or they can stay in and get the income from owning the stock.
So whatever business they want to start, post. I mean, well, they're still athletes. You're going to come and approach them and say, hey, we can start a business with you.
Yeah, well, the funds are all the rage, and so with athletes, most people think you have to be a top earner, but we create funds for college athletes, as long as they're kind of business minded, and this this creates them a business that they can make additional income on outside of their playing career, and then through retirement, like they're the chairman of the board of this business, which has a venture capital arm, a real estate arm, private equity arm, insurance arm, so that they can sell now all these products and services to their fans as well. So it's a branded hub, but funded with private equity fund.
That's crazy. That's crazy. We're gonna have to talk way more about that.
And it gets better because we have sports complexes, and we've taken advantage of a tax deferment program through conservative easements. So we have 200 extraordinary, like these super big sports stadium complexes that we are rolling out. So you can have franchise owner rights to it. We're selling seat licenses in the form of NFTs because of that blockchain. Anybody who has a seat license can offer tickets and stuff, or sell the seat license, and there's that documentation through the ledger. So it's crazy, huge company. And,
I see the excitement building in Vito's eyes. Looking at me.
Yeah, so 360sportsinc.com is where you can find that. And we didn't get InsuranceClaimGuy.com, GUI. is my insurance email or website.
It's an insurance,
Claim Guy.
right? InsuranceClaimGuy.com.
.com. Yeah, not fancy.
Sweet. We'll be sure to get that out along with. I'm pretty sure Vito has the TikTok link. Make sure.
So you guys say you're in Arizona, right?
California.
Oh, you're in
California. Yeah.
I'm just trying to think of. I don't think we have any funds with California properties
Yet.
But 360sportsx.com has all our funds. There's a data room, all the PPMs, all the SEC filings. It's all there. So
Right on.
yeah, it's really transparent. Like, you know, we're a public company, so
We'll
we
definitely bring you back on to talk more about that and more about the insurance side too. I think there's probably several more topics we could explore over the coming months. So
That's crazy.
I'm excited to get into all of it.
Yeah. So, well, thank you for having me on, guys. I really appreciate it.
Yeah, Anthony, thank you. I hope everybody that watches this or hears this on our podcast understands that this isn't about selling you anything. This is about protecting you and educating you on where you need to be, because there's so many people that are just so ignorant, just like me. And I hate to use that word, but it's not a negative word in the way I'm using it. We're ignorant to what the world has to offer and the protections. And Anthony, thank you for doing that. You're definitely a knight in shining armor here. I appreciate it.
Thank you.
I wanted to say shield, but you're a knight in shining armor. You're there to protect us, right? Not that
Yeah.
we're victims, but
No, and it's not ignorance. You don't know what you don't know.
right.
And like the lady that sold the car for, you know, $5,000 out of the garage after her husband died, and somebody came and like, you sold that $80 million car for $5,000. She's like, but I got $5,000.
I did what now? Could you imagine?
Yeah, I'm sure it happens all the time. Like, people are just, you know, somebody passes away and they're like, just take it.
Yeah. Right on.
Yeah. Well, guys, thanks a lot for your time. Anthony, I can't wait for you to come on and talk to us a little bit more. Thanks a lot.
Sure. Thanks for having me.
All right.
Later, Anthony.
See you guys.